Avinash Gorakshakar joins us this morning. Mr. Gorakshakar, thank you so much, sir, for your time. Just help us understand, this entire week has pretty much been a red week on the markets. No glimmer of hope arriving from any piece of news, whether in India or globally. How long are investors expected to deal with the pain, sir?
Yeah, good morning, Kartik. I think market mood has got significantly negated and spoiled largely because of the rupee depreciation. I think the rupee continues to see a free fall, and I think whenever the currency depreciates, one thing is very clear: the markets don't take this very seriously, and that is one of the key reasons for the markets correcting significantly. The other reason continues to be the continuous FI selling. In fact, even as we speak, a large amount of FI outflows continue to go out. For them, the rupee depreciation is one factor. The other factor is obviously they see better opportunities in the US markets. And I think the third important factor, Karthik, is that despite being end of the year, we see the primary market very buoyant. In fact, a lot of IPOs are yet expected to come. So there's a very large supply of primary market paper. So, all these things cumulatively have contributed to the fall. And I think the volatility in the markets have increased, obviously, largely because of the rupee depreciation. See, our sense is that clearly markets are not going to go up based on the index, at least in the near term. Markets will await for the Q3 numbers, which obviously, in all probability, are expected to be reasonably better than quarter two. We believe that sectors like capital goods, autos, auto components, FMCG, hospitality, hotels. These are good opportunities provided investors have a slightly longer term kind of time horizon. These are times, Karthik, where investors have been frustrated for the last 12 to 15 months. Overall, there have been no returns from equities. But this is a very good time to actually value pick and cherry pick some of the good companies which have shown good numbers where the management commentary is good. I think investors need to put in a little more patience and conviction. My belief is that post March this year, that is next year, I think you could see a kind of a rebound because markets are expecting a good budget also to come out,
Yeah.
and most importantly, I think once the US trade deal, as you mentioned, if it materializes sometime before March or after March, that would be a next trigger point. So I think we need to just keep the conviction and stay invested. That's the only advice I've got.
Right, so keep the conviction, stay invested, and those two headline events, in fact, three potential headline events. You will have Q3 results starting Jan, you will have the budget in February, and potentially the India-US trade deal, the final contours signed, sealed, perhaps delivered by March. So three headline events to look forward to in the start of 2026. Meanwhile, you were also talking about cherry picking and value buying. Is that the sentiment seen on IT stocks this morning? Because despite the bloodbath that we saw on NASDAQ yesterday, Mr. Gorakshakar, we are seeing IT stocks in India. Infosys up about 1.25%, TCS up about 0.7%, HCL Tech up about 0.9%, Wipro up about 1.3%. Are we actually seeing that value buying, cherry picking in IT stocks this morning?
Yeah, definitely, Karthik. I think if you look at our IT companies, most of these companies are service-driven models.
Yeah.
We don't have, fortunately or unfortunately, a pure AI play. And that has become a kind of a positive for us. See, most of these companies are steady compounders. And I think if you look at their balance sheets, virtually no debt on the books, very cash rich, a very good order book. And I think that is probably the reason, valuations still appear to be quite attractive. In fact, we have been telling our clients to look at companies like Infosys, HCL Tech, Coforge, the larger players where we believe that quarter three is also going to be equally strong like quarter two. And most importantly, there's a lot of deal pipeline from the US market, which eventually, once the US trade deal happens, is definitely going to help these companies increase their order book. So I think even Infosys at the current odd level, or maybe a HCL Tech or a Coforge, can definitely present a good investment opportunity. Somebody who's got a 12 to 15-month view. I think markets would wait for post-March kind of numbers and the event, which almost everybody is expecting in the market,
Right.
and that would give a lot of clarity to the investors here.
All right. And finally, I want to get your view on the auto stocks also this morning. If you look at the Nifty 50 auto stocks, there's a massive correction visible. In fact, Mahindra & Mahindra is down about 1.5%. Tata Motors is down about 1.6%. Maruti Suzuki is down about 0.5 percentage point. And this coming despite the order from the Supreme Court yesterday pretty much reintroducing that end-of-life vehicle ban for BS3 cars, which some would have assumed is going to prop up the demand for purchasing new cars, and yet we are not seeing that translate into stock prices this morning.
No, I think Karthik, these kind of things normally do happen in a market which has been battered down. I would say that this is a very good opportunity for investors to look at automobile stocks. I think we have been telling our clients to buy Mahindra and Mahindra, Tata Motors passenger car. These companies, our sense is that the GST cuts, the interest rate cuts, and the rural demand is all going to percolate into a very strong kind of demand trajectory over the next 6 to 12 months. So I think M&M, if it is correcting today, it's a good opportunity for investors to buy it. Our sense is that probably over the next, say, 12, 15 months, you could look at levels of 3900, 3950. Tata Motors passenger car also around 470, 480 is our near-term target. So I think, these are opportunities which the investors should accumulate. And I think keep the patience and the conviction on. I think these companies, once they put out their quarterly numbers and management commentaries come out, I think you're going to see a good amount of re-rating happening here.
All right, Avinash Gorakshakar, so thank you so much for your time and pleasure having you, as always, right here with us on News9.